Hey, it's Paul Moore with BiggerPockets, and today we're going to talk about the looming recession. Who's afraid of the big bad recession? Well, hopefully, if you're a real estate investor, you're not too afraid, but we need to be wise, right? Some of us got burned in the last recession, and we don't want to do that again. I was among those who probably could have done better during the last recession. How about you? So, hey, again, I'm Paul Moore with BiggerPockets and Wellings Capital. I need to hear from you. Let me know if you can hear me. I am streaming live here on YouTube and on Facebook and on BiggerPockets. I'm going to finish dialing in a few things here, and we will get started. So if you can hear me, I'd love to know. Tell me where you're from. Tell me your name. Hey, Katie Walden, thanks for joining. Hey, Danny. Hey, Brandon's Journey. Hey, Kevin Schmidt, Jerry, Alex. Where are you from? Where are y'all from? Give me a heads up. Hey, Joe Doyle. Hey, Jason Humphreys. Okay, I'm glad you can hear me. Hey, folks, I am so sorry I hurt some of your ears last time when I leaned into the microphone like this. I won't do that again. If you're wearing headphones or whatever, I promise to do your ears a favor and not blast you out this time. But hey, I want to know where you're from and what you do. If you're in real estate right now, if you're wanting to get into real estate, what you're doing. Hey, Faith from Morgantown, West Virginia. Like that town. Hey, Scott. Hey, Revolver Sam in the Bay Area. Hey, Ron from Oregon. Hey, do me a favor. BiggerPockets would love to hear from you. If you think these type of shows are worthwhile, and if this is valuable content, please give us a thumbs up, a like, a share that'll tell Facebook and BiggerPockets, YouTube that this is valuable content. Hey, Robert from Scranton, Richard from Tennessee, you're saving now. Okay, so one of the indicators of a recession, the potential of an upcoming recession, is that certain smart people are hoarding cash right now. Who's the smartest investor on the planet? You may think it is Brandon Turner, and Brandon, if you're out there, maybe you are, but Brandon's buying, well, let's see what Brandon's buying. I'm going to hold that close to the vest for a moment and tell you in a minute. But I will tell you that the wisest, or at least the most successful investor on the planet is Warren Buffett, and he's been criticized at his last two annual meetings for hoarding cash. He and Charlie Munger took some heat for hoarding cash, and you got to wonder why. Why did Sam Zell, one of the largest apartment owners in the world, unload 23,000 apartment units not that long ago? So you got to ask yourselves questions like these, and you got to ask, why does it look like a lot of indicators are showing that we are about to be in recession? So I'm going to go over a couple of those indicators first. Then we're going to have a back and forth discussion about what we all think. Like I said, this is let's discuss the potential coming recession. So how's a recession defined? Well, one rule of thumb is that when there are two straight quarters of an economic contraction in gross domestic product, that is a potential of that is actually a definition of a recession. That's not the official definition, though. The National Bureau of Economic Research says it's a significant decline in economic activity lasting for more than a few months. The Bureau makes this determination retroactively. So like in November 2008, they actually said, the Great Recession started 11 months before, at the beginning of 2008. Now, Ray Dalio, I think it was Ray Dalio. Oh, no, it's Howard Marks, who wrote Mastering the Market Cycle, Getting the Odds in Your Favor. Great book. I just read it. He says that the economy, the recession, was really only a contraction of 15 weeks in the fall of 2008. Now, you might wonder, as a reporter did, what Howard Marks and Warren Buffett were doing during that contraction, during that 15 weeks. Well, they were buying as much as they could. And a reporter asked Howard Marks, hey, wait, you mean you're selling right now, right? He said, no, I'm buying. If not now, when? Think about that, real estate investors. If not now, when? An economic recession can be the greatest potential opportunity for us as investors, greater than any other investment opportunity. So if we are coming into a recession, it could be a great time to buy. Not a great time to sell, and certainly not a great time for you to be forced into selling. I hope none of you are in that situation. But if you do find yourself in that situation, there are things you can do to protect your assets now before things get worse. Now, how long has the U.S., what's the record U.S. expansion? Well, it is about 10 years. And as of July 1st, 2019, about 2 months ago, we just surpassed the previous longest recorded economic expansion in U.S. history. Now, since all economic cycles, since all cycles are based in part on human psychology, there will always be cycles. There's not enough automation. There's not enough foolproof technology that can take the place of human psychology, because there are always humans involved in trading, buying, selling, trading real estate, trading stocks, trading bonds, etc. And so because there's always psychology, there's always over-optimism, especially right before the height of the market, when you should be the most cautious. And there's also always over-pessimism right before the bottom of the market. And by the way, the people who were overly optimistic right before the top are the same people that are overly pessimistic right before and after the time of the bottom. The same people say, this tree is going to grow to the sky. The same people that say, this time it's different. Everything's better. Technology, automation, everything has taken the place of those prior problems. And like a famous, very famous multifamily syndicator said in my hearing recently, he said, it doesn't matter if you overpay for multifamily, you just got to get in. It's okay to overpay. What do you folks think of that? You're smart. You're here on BiggerPockets. Is it okay to overpay for multifamily? Is it okay to overpay for any investment? What would Warren Buffett say? What would Howard Marks and Ray Dalio, some of the most famous investors of our time, Sam Zell, Charlie Munger, what would they say? My friends, I'm going to answer that question. They would say just the opposite. They would say it's not okay to overpay. It's not okay to ignore the fundamentals. It's not okay to overpay and end up on the wrong side of a transaction. Folks, in every economic downturn, some guy tracked this, an author, since the 1300s, people were saying, it's different this time. If you hear that, there may be reasons and there may be aspects to where things are different this time, but if you hear that as an investment philosophy, folks, run away. It's not true. Things are not different. I believed that lie. I have a podcast called How to Lose Money. You can find us at howtolosemoney.com. And we talk about famous failures, upsets, mistakes, and things that went wrong in our investing careers. And a lot of those investment mistakes, not all of them, but a lot of them are tied to 2006 to 2009, when people were overly optimistic when they should have been selling. And then they were overly pessimistic when they should have been buying. Like I said, Warren Buffett, Charlie Munger, others were buying all they could get in the height, or I should say the depths of the Great Recession. So Rima Organ says, how do you know when you're overpaying? That's the question. When the fundamentals aren't sound, when you're depending on appreciation instead of depending on existing cash flow, you're probably overpaying for an asset. Rod Cleef is a famous apartment investor. Hey, Nate Shields, thanks for joining, my friend. Guys, Dude Real Estate is a really smart dude, and he can answer a lot of your questions, especially over here on the YouTube side. So if you have a question and I don't get to it, Nate Shields will try to answer your question. But at any rate, and Brent, I will try to get back to your question. That's going to take a little more time, and Phil. Hey, so anyway, if you're overpaying, if you're depending on appreciation, if you're betting on things to keep going up, you might be overpaying. Now, like I said, Rod Khleif was a smart investor before the last downturn. His net worth, on paper at least, went up $30 million around the year 2006 or 7, and it dropped $50 million in the next year as we plunged into the Great Recession in 2007, 2008. He was depending on appreciation, and Rod now has a podcast about cash flow. And he basically says cash flow is king. And it's really important that you take his advice to heart and you buy assets that are already cash flowing. Does that mean speculating is evil? No, we need speculators. Nothing would ever get built. Nothing new would ever come out of the ground if there wasn't some speculation. Now, how do we define the difference between investing and speculating? And if you're going to write anything down and take it to heart, this might be it. That's right, Richard. Cash flow's king. So investing, which is what I thought I was doing 20 years ago when I got into real estate investing, investing is when your principal is generally safe and you have a chance to make a return. Speculating is when your principal is not at all safe and you have a chance to make a return. And so I don't want to pick on these guys, and I know it'll be a lot of you on here, but Bitcoin is an example, or investing in cryptocurrency, of speculating. And like I said, there's nothing wrong with that, but as long as you know you are speculating, you could lose all of your principal. You probably won't, but you could lose all of your principal as a speculator because, see, there's no... I did an article in BiggerPockets, and it said, what is wealth? Wealth is assets. Wealth is an asset that produces income, okay? An asset that produces income. And if you have true wealth, it's not a Maserati or a mansion or some status symbol. That's nice byproducts of wealth, but the wealth itself is an asset that produces income. And if you're a speculator, like, again, I don't want to pick on you guys, but if you're involved in Bitcoin, it's not an asset that produces income. Real estate, on the other hand, is typically an asset that produces income. Now, you can speculate with real estate, Ryan. You can speculate by doing ground up development and trying to sell for a profit. And again, that's not wrong. That's great. I've done it many times. And our company, Wellings Capital, has a fund just for doing ground up development. But we're incredibly careful when we do it. And we have all kinds of margins of safety built in. You know, Warren Buffett loves the margin of safety concept. If you're an engineer on here, you would know that there's a margin of safety. Every time you build a bridge, you don't have to build it for just the weight it could carry. You have to build it for like 3 or 4 times, 300 or 400% of what it could carry. And that's a margin of safety or a safety factor. Using leverage is another way of potentially speculating. Now, over leveraging real estate that's otherwise safe is a way of speculating. It's something we don't want to do too much. So like I said, we're going to talk about recession today. We're going to do a lot of Q&A. A lot of people are talking about the different signs of recession. So one sign of recession is the inverted yield curve. Now, the inverted yield curve, Wells Fargo says, is exaggerated. It's not as important as it used to be according to them. And that's when short-term interest rates are actually higher than long-term rates. People usually are willing they want a higher rate for tying up their capital longer. okay? But when short-term rates are actually higher than long-term, that means there's some pessimism about the long-term outlook of the economy. And so that happened very briefly. I believe it happened in the spring with one comparable metric, and then it happened again in middle of August. I think it was August 10th or 15th. And a lot of people immediately started saying, okay, a recession's coming, the sky is falling. Well, we don't really know that. There's a lot of other signs that you need to look at to see if there is a potential recession. Let's look at what a couple of those are. Number one, housing starts are down. Now, there could be other reasons for that. One could be that there are more people are choosing to rent than buy. That could cause housing starts to be down. Another reason is builders prefer to build higher end luxury homes, and luxury home sales are down and middle class home sales are actually up. Okay, so you have to be really careful how you look at these indicators. But I will say, if luxury buying, art, really high-end cars, high-end antiques, high-end luxury, penthouses and mansions, if those sales are down, chances are that's going to trickle down to the whole economy. And those sales, according to some measures, have been down recently. Okay? Temporary staffing levels. If temporary staffing is actually, if temporary staffing is down, then that is a sign that maybe the excess capacity in the workplace is down. But as of June, temporary staffing has reached a record high. Quit rates, employees who quit voluntarily, they typically quit when they think they have all kinds of other opportunities that are better, and that usually happens in a great economy. And quit rates have been very, very high since the recession. And so that is another indicator. Auto sales, car sales have really been up the last several years, but they're falling according to some indicators right now. Consumer sentiment, it's actually about roughly unchanged since last year, according to what I'm reading. ISM manufacturing index, it's above normal, above a danger zone. So it looks like that's not a problem. The unemployment rate is obviously a huge indicator, and the unemployment rate is all clear at generally record levels of employment in the U.S. Now, other signs that there could be problems is a little bit lower business spending, a little bit lower orders for 5-month down the road products that are needed for manufacturing. Gold prices are up from $1,300 to $1,550 since May. That's a certain sign that at least people think that there could be a problem. I had to lean in to see that. S&P 500 earnings per share estimates from December to now are down from 173 to 165 or so. That's a sign of a little potential contraction. GDP growth from quarter one to quarter two is down from 3 to 2% on an annualized basis. So that's another sign that maybe we're starting to see a little problem. The CNBC says there's been a pullback in high-end real estate. It's had the worst year since the financial crisis, according to them. Luxury retailers are struggling. I would also say that has something to do with the online versus retail world. I mean, 12,870 retail stores, I think the number is, are closing down in the U.S. this year. That may have something to do with that. In the first half of 2019, art auction sales were down for the first time in years. Sales of homes priced $1.5 million or more were down 5% in the second quarter. So again, there's some signs. Some people have suggested to me that perhaps there is a conspiracy to be sure that we get a new president next year. What do you think of that? That's sure to cause some controversy on here. Love to hear what you think of that. I don't have an opinion on that either way. But some people are saying, hey, there are people who are pulling levers behind the scenes to make sure that the current president, President Trump, is not reelected. There's other people who are saying, hey, wait a minute, if that's so, then why'd the Fed just drop interest rates, which is going to stimulate the economy? So that could go either way. So that's some brief thoughts on the potential recession. Like I said, we're here to discuss the potential recession. So here's the ground rules, folks. If you put a question or a comment in on Facebook and I haven't read it yet, which is everyone's, you're probably going to have to copy and paste it because it's probably dropped off my screen. If you put a comment in on YouTube and you want to make sure we get to discuss it, go ahead and copy and paste it in and we will try to get to that. So Lawrence from Broadway, North Carolina. Brandon Baldwin says, in my opinion, it still isn't good to overpay. Yep. As it hurts your overall bottom line, regardless of the debt service coverage ratio. We can talk about that if anybody wants to talk about the DSCR. Basically, you want to have a 20 to 30% or more margin of safety to pay your mortgage. I would say it's only okay if you have 1031 money and you're up against timeline. So Brandon's basically saying if you have 1031 exchange money, you come out of a 1031 tax deferred exchange, and you're willing to overpay a little for real estate to avoid paying the tax, that might be okay. Almost everybody would agree with that, Brandon. So good thought. I like it. Brent says, I generally go for the 1% rule to try to collect $1,000 a month for every $100,000 in purchase price. There are people on BiggerPockets who live and die by that rule. There are other people who say the 1% rule doesn't work for them. I'd love to hear your thoughts on that. Toby Madigan says, I think the opposite. I think the administration, that's Trump, is panicking and trying to put in stopgap measures to artificially delay a recession. Yeah, perhaps. Toby, that's a good thought. Touchdown Raiders 2009. Hey, I'm going to be in Las Vegas this week, and I understand the Raiders are moving to Vegas. I'm looking forward to seeing the new stadium that just was finished in construction. The recession will happen because China is built on a house of cards, and that will push the world into a recession unless they start working with the U.S. Okay, good thought. Nate Shields, Dude Real Estate, says 1% rule is okay if taxes and expenses are low. Yeah, good thought. Okay, what else we got here? Roland Jones says we need a new one, Yang, for sanity in government. Some people are hoping for a recession to get the president out of office. Does the trade war with China affect us? Yeah, Caleb, great question. A lot of people are saying that the trade war will certainly have a negative effect. Another potential negative effect is the uncertainty with Brexit. You know, with Great Britain not sure if they're going to go through with Brexit, that's causing a lot of uncertainty. In fact, there's an uncertainty index that's put out by an economic research think tank, and the uncertainty index hit 342 in June, which means nothing to most of us. But basically, that's an all-time record high, which means there's uncertainty in the economy, and there's uncertainty out there at a record level. So that doesn't mean there's going to be a recession, but it does mean, that along with the trade war and other things could mean that there is an actual potential of an economic problem. One of the major differences with real estate investing with countries with high taxes. Investing with countries with high taxes. So do you mean, Ryan, when you invest in a country with high taxes, how will it affect your investing? Go ahead and elaborate a little. Prada says, should I sell a property with good cash flow to give myself more to work with in future investments? Prada, great question. There's no way any of us on here can answer that for you. It depends on your long and short-term goals. But if you've got a property that's at the peak of the market, at least up to now, you never know about the future, you may want to consider selling that to get cash and be ready for a potential downturn. If you really believe there's going to be a downturn, you might want to sell while the market's hot. I talked to a CBRE, one of the largest apartment brokers in the U.S., about our 125 units that we own in Lexington, Kentucky. And they were saying there is not, if we decide to list that property, they said there's not another apartment complex that size, that vintage, that price range, which is around like something like 10 million on the market in the whole Midwest right now. That would be Cincinnati, Lexington, Louisville, Dayton, Indianapolis, and again, I don't know where all that includes, but the point is there's a premium paid right now. It's called a scarcity premium. If you've got a multifamily, a duplex, a single family, a lot of these types of properties, you can sometimes get a scarcity premium because they're in such high demand. That will not happen in a recession. Of course, it'll be just the opposite. People will be willing to offload at a low price, and you should be able to buy if you have the cash. And so if you believe there's going to be a recession, it'd be a good time to get cash and get ready. I can't get inside Warren and Charlie's head, but I'm guessing that Berkshire Hathaway thinks there might be that type of downturn. They never predict. They'll never say when they think it'll be. Neither will Howard Marks, who is friends with Buffett, but they always know that there is going to be one. There's always going to be a recession. Gonzalo says, what would you do to prepare yourself to capitalize on a possible recession if you had 5 to 10,000 to play with? I'm going to let Nate Shields take a shot at that. Hey, Bilal. Oh, Bilal, you're from Lexington. Okay, great. That's a hard question. I would consider maybe trying to continue to save and be ready for some kind of deal where you can go into a bank, if you believe there's going to be a recession, that is, and try to get something for 10,000 down. That's what I would try to do. You probably can't get much for 10,000 down now, but you might be able to get a bank to help you later. Hey, Hanson, how are you? Hey, Thomas, my question is there a good multifamily investment in a strong student rental location close to the university? Do you think that would be a good recession-proof investment effectively? I have heard that student housing is actually better in a recession. I'd love to hear anybody else's thoughts on that. I don't think that makes sense to me, but I've heard that a lot of people, students, actually enrollment can go up sometimes during a recession because people in a great economy, they're working. In a terrible economy, they're going to school. I don't know if I buy that. I'm more concerned with the long-term trend of online schooling, like Liberty University, which is 15 minutes away from me. They have like 15,000 students online, but they have over 15,000 students here in Lynchburg, Virginia, but 100,000 students online. If that's true, maybe if that trend continues, maybe student housing won't be so great. I don't know. Sparsh says, how much of a price drop can one expect during a recession for single-family homes? Okay, so in places like Florida, Sparsh, Florida, California, Nevada, and Arizona, they saw price drops in general of like 50 to 60%. Somebody here can probably refute me. I don't know. I know 55% was Jacksonville, Florida. We checked that. But in other places like Virginia, where I am, and other places in the heartland, Indianapolis, Lexington, Kentucky, Madison, Wisconsin. Nate, you can speak to this. I don't think the drop was much at all, maybe 10 or 15%. So I would say somewhere between 10 and 50% in general. Chad says Ann Arbor, Michigan University of Michigan, of course, has a bubble because of student housing. Roloff says, is a coming recession a good reason to wait to buy real estate? A lot of people think that, Roloff. And I wrote a book on multifamily investing, and I will tell you that we are not investing in multifamily right now. That doesn't mean we're the smartest people around, but I will say that a lot of people in my multifamily mastermind, which includes some of the smartest multifamily investors around, they think the same thing. Gino says, how do you gain an edge buying your first duplex in a hot market like Cleveland? Find a fantastic realtor and also drive up and down the streets if you're there, Gino. So lots more questions are coming in than I can possibly get to. Emiliano says, I live in Orange County, California, multifamily or $1 million and up. Yeah, you know what, Emiliano, that's probably going to be a place that gets hit hardest. Hey, I'd love to hear from folks in Southern California, Bay Area, LA, Orlando. What are prices doing now? New York, Chicago. I've heard there's a softening in all those markets. In fact, I've got an article right here in front of me that says LA, Chicago, San Francisco, San Jose are all experiencing cap rate expansion, which means slight price drops right now in real estate. Swish Kebab says, I can get almost a 30-year 0% fixed rate in Denmark soon. What do you think of that? Love to hear what you all think of that. Wow. Thanks, Gino. Emiliano lives in Riverside. Okay. So, yeah, California is known, California along with Arizona, some parts of Nevada are known for the biggest ups and biggest downs in an economic swing. So it's a great time to buy. By the way, Howard, it's a great time to buy when a recession is hitting. Howard Marks and Warren Buffett talked a lot about catching a falling knife. In his book, Mastering the Market Cycle, Getting the Odds in Your Favor, Howard Marks says you should not wait till the apparent bottom of a cycle to buy. You should buy as stuff is falling, because that's when the irrational exuberance that was here right before the top is now given way to absolute terror, and people are willing to sell at any price to get out of a property. And so buy, catch a falling knife. It's the hardest thing to do. It's so easy for everyone on here, including me, to think that you can absolutely catch a falling knife, but it is really, really hard to do. It's much harder than you think. You have to have nerves of steel to actually buy when the market is in a free fall. But that is the time to buy. Carlos says, Tampa Bay area is booming. Is it better to use an equity line? If you can use an equity line safely and keep the market, the loan to value ratio in your house, let's say 65% or less, in general, yeah, I would try to use an equity line if you can. Emiliano says, if the market takes a crash, how hard do you think it would be to get funding with $65,000, $65,000 down? Pretty hard to get funding. The problem is the economic cycle is in conjunction with the banking cycle, which is also the credit cycle, which means bankers, just like other humans, contract their thinking during a recession. And when they should be lending the most, they're actually pulling back and lending the least. And that is a double whammy of a recession. Let's see. Charles says, I don't feel like Austin will get hit hard. It didn't last round. Yeah, I think Austin has a very special opposite effect of California right now. Did you know that U-Haul trucks are coming from California to Austin at, I think it's 5 or 6 times the rate they're heading back, or at least they're heading back empty a lot more often. So they have that advantage, and I think during a recession that would continue. Places like Toyota, companies like Toyota and lots of others are locating big time in Texas right now, and they're really, really helping. Charles says, I look at it as everything's on sale, not catching a falling knife. Nice, Charles. That's right. Great. Bob Vila says, I bought a cheap $30,000 foreclosure 3 months ago. Amazon's going to put in a new facility. Should that mean there should be an increase in values? Bob, likely the real estate market, if they knew that Amazon facility was coming, it's already factored that in. But hey, possibly. Talk to your local real estate agent to be sure. Talk to your local real estate investors. Toby says California is no longer livable price-wise. Yeah, it's too bad because the weather is great. Thomas says, how hard do you think the recession will hit the greater Boston area? Boston and New York, they've had some softening with this cap rate already expansion a little bit, but these are markets in general that are always going to bounce back. Obviously there may come a time in the future when they don't, but historically, a lot of large, really smart investors have been willing to pay a premium, which means a lower cap rate for investments in places like Boston because they always bounce back. Toby says, bottom line, now is the time to sell real estate and not buy, right? Until the recession actually hits. Yeah, Toby, if you have overpriced real estate that you own, overpriced is always relative. But if you think you've wrung enough value out of it and you're willing to sell it and hoard cash for a little bit, it might be a smart time to do that. By the way, folks, we should talk about the election year. An election cycle always brings volatility, uncertainty, no matter who's winning or losing an election. During that election cycle, the last, let's say, 10 months of 2020, there's going to be uncertainty, and there's probably going to be a softening in the number of buyers. I see it every election cycle. I've been at this for almost 20 years. And so you might want to consider the fact that the buying frenzy will probably cool off next year for that reason alone, if nothing else. Brian says, do commercial properties go on sale during a recession? Yes. Basically, that comes in the form of cap rate expansion, Brian. Jan says, sell in California, sit on cash, or 1031 is the name of the game right now. The problem I see with 1031 exchange, Jan, is that it forces you to buy. You have to name assets, 2 or 3 assets within 45 days, and you have to close within 6 months. So you might be selling an overpriced asset and actually buying something that's just as overpriced. And you might even go from the frying pan into the fire. You may want to consider a deferred sales trust. Now, folks, if you haven't heard of a deferred sales trust, you can learn more about that. I did a webinar on that last week. You can reach out to me at my BiggerPockets profile, or I'm going to give you a website to get more information on the deferred sales trust. And that is, you can go to Wellings Capital. That's my website, wellingscapital.com/resources. And you can find out about a deferred sales trust. It's an awesome alternative to a 1031 exchange. It'll allow you to park cash, defer the capital gains, and not necessarily have to buy on a deadline. So check out the deferred sales trust. Yeah, right, Jan. Brent says, I would avoid retail, though, unless there's a Starbucks or Dunkin' in the plaza. Good point, Brent. Aesthetic Caleb, who wants to partner on a deal here in Kansas City? Agent here, have some cash, but not the credit for a loan. So if anybody wants to partner with Caleb, check it out. Brent says you got to find a real quick deal with the 1031. Yeah, it causes people to overpay. I got a call from a guy the other day who had $6 million he had to place really quickly with a 1031 exchange. So it's hard to help somebody like that. Ryan says, with countries with high taxes, would my margin of safety have to be higher? Or what other precautions would one have to take? I don't think so. I don't think it would have to be higher unless you think the tax is going to go up. Now, Ryan, if you think the tax is going to go up more, then yeah, I think you need a higher margin of safety. Mohammed says, how to save on tax while flipping houses. You can't do a 1031 exchange when you flip a house. Nate, you can correct me on that if I'm wrong, but you're supposed to have a 1031 exchange only when you have a buy and hold property. At least that's how the law reads. But you can do a deferred sales trust. So check that out if you have a large amount of capital gains you're trying to push off into the future. Sanjay Baji, says, do you recommend parking your 401k and using an equity trust, deferred sales trust to buy real estate? I think you mean like a self-directed IRA. Yes, I do. If you have the diligence and if you know you're going to be really, really disciplined with your money, I recommend rolling your 401k from your company, unless there's a huge penalty, which there shouldn't be any, into a self-directed IRA and investing in real estate that way. I do it myself. I've been doing it that way for almost 2 decades. Kali Valley says, HELOCs, how bad will it need to be before banks lock them down? They sure did last time. Home equity lines of credit were very hard to get, and some people lost theirs during the last recession. So how bad will it have to get? I'd say pretty bad before you really lose it. It depends on the value of your home and the likely appraised value of the home in the future. Ryan says, can you buy a property if you're under 18? I think you can, but there are special rules protecting you, special contract rules. You might want to check with a local real estate attorney or a local real estate agent. Toby says, why not rent for a while? Yeah, why buy in Ohio if a large value drop's coming? Exactly, Toby. I agree. You're replying to Jan, but I agree. Okay, we are getting 40 minutes into the hour. So I am going to take a moment to try to go back through a few of these questions, and then we're going to wrap it up fairly soon. So Tiles says, why wait to buy multifamily? I found one recently. Outgoing payments of $1,500, incoming rents are $2,500. Tiles, man, you found a deal that most people don't. So good luck with that. And yeah, I think that sounds really good. Someone says, can I buy my second multifamily home with FHA? I think as long as you have lived in the first one for over a year and you are house hacking into this second one. Charles says, do you believe certain local economies with booming real estate markets will have a chance of growing during the recession? Not likely, Charles. I guess it's possible. Real Estate Wizard says, everyone's preaching recession. Is this to put pressure on sellers? There are some signs of recession, as I said at the beginning, but it may be also a political move, some people think. Ryan says, what are the best places to get your info on current markets? Folks, if you're not a member of BiggerPockets Pro, you need to be. Get a BiggerPockets Pro membership, and you can get access to a discounted subscription to Neighborhood Scout. They have incredible information on submarkets. Every submarket in the country, as far as I know, is covered. It's great information, and you should check out Neighborhood Scout. But like I said, investing in a BiggerPockets Pro membership is your first step. It's the best investment I've ever made, and I don't work for BiggerPockets. It's the best investment I've ever made as a real estate professional over 2 decades. Toby says, Ohio saw huge drops last time. My mom's Ohio house lost 40 to 50%. If I had cash flow, that's another thing. But keep in mind, rents may go down in a recession as well. Yep, that's right. But usually not 40 or 50%. Typically, values swing much, much farther than rents swing. And by the way, that's another reason you should consider being a long-term holder of real estate, because during a recession, cap rates will rise. Sometimes if inflation kicks in, rents will rise. But after the recession's over, cap rates will go back down, but usually rents won't. And so that's a reason to be a long-term holder, especially if you have low interest rate debt. Beauty and the Soul says, can you still get an FHA loan for 3% down if you got it for 3% down last time? Nate, what do you think? I think so. Cali Valley says, speaking to reducing property tax requests when local value drops. Yes, you should try to do that, especially in Texas. You can do that in Texas even better than some places because it's subjective more than some places. Brock says, is there a sign that absolutely means there will be a recession? No, Brock. I mean, you can't even tell there's a recession until you look in a rearview mirror. You can't absolutely tell until you look back at the stats. Juan says, best strategy to use as a newbie waiting on the recession. Learn all you can. Get a mentor. Get training. Read books. Do podcasts. Learn all you can and hoard cash. Cut your spending and be ready with some cash available would be what I would say if you believe there's a recession coming. One Courageous says, how do we know it's a recession and not a depression? A depression is even more than 2 quarters of economic contraction. I don't remember how many quarters. It might be 4 or 6 quarters in a row. And really a recession is just a mini depression. It's just shorter time. And by the way, the last downturn, according to Howard Marks, the author I keep referencing, was only about 15 weeks. And you guys are probably going to throw tomatoes at me for saying that, but throw them at Howard. He said technically the contraction itself was only 15 weeks. Soren says, I currently have 2 rentals that cash flow, looking to buy a third and have cash to spend, not in a hurry. Should I wait for a recession? Soren, yeah, if you can wait, if you think there's a recession coming, yes, you should consider that. D. Hatch says, New York also passed new laws on rent control. Yeah, I've heard that, and I've heard that has caused a decrease in property values and inflation in property values in New York. And of course, that's happening in other places like California, Oregon, other places as well. Samuel Castro says, should I wait for a recession? I probably answered that already. JK says, it seems like California is considering enacting statewide rent control. Will this have a drastically negative effect on real estate values? You know, JK, with rent control, high taxes, potential of population decrease in certain places, all those things combined could, especially if a recession comes in, yeah, it sure could. It sure could. The 121 says, you can't time the market, buddy. We low-key probably having a recession, though. Yeah, you cannot time the market. That's right. Even Howard Marks, Warren Buffett, and Charlie Munger says they don't. They just act appropriately given the time and the signs they see today. That's very important. Charles says, how do you think the Atlanta real estate market will fare in the recession? It's been booming here for 3 years. I think it'll do better than some markets. It's in a very, very growing area, but I think it'll still have some type of contraction because it has been booming. Folks, when things are booming and when they're higher than they should be, according to fundamentals, then they'll probably drop faster and farther than they otherwise would. And those are the perfect places to buy. Folks, if you bought in Las Vegas in 2009, 10, maybe 2011, you probably doubled your asset value by now, which means you probably quadrupled or more your cash if you use debt. Think about that. Jerry says, I have some decent equity in my primary property. Should I use a HELOC now and hold the money to buy during a recession? Yeah, I would get a HELOC. I would lock it in. And if you think things are like falling apart, you might want to move the money out of the HELOC and pay the interest rate to make sure they don't shut it down on you. But you definitely want to have that cash available during a recession. And so, okay, so Thomas says, I heard neighborhood scouts untrustworthy. Honestly, it's sometimes a couple years behind. You've got to go drive the neighborhood yourself. Folks, don't count on Google Earth. Don't count on anything except driving, doing a 1-3-5 analysis yourself. And if you don't know how to do that, you can join me on my weekly mentoring call tomorrow, Wednesday, at noon Eastern, I think. I'm going to be doing a mentoring call. If you want to know how to get on that, you'll have to reach out to me at my BiggerPockets profile. Mega Bubba 2112. Is this referring to Alex, Neil, and Getty 2112? You'll know what I mean. Just bought my first rental 2 weeks ago in Orlando. How do you think it will do here? Orlando is a phenomenal rental market. Real Estate Wizard, do you have a YouTube channel? Not really. But you can see me here on BiggerPockets. The 121. I do something like this almost once a week. And I also do other events during the week as well on a private channel. Can you Airbnb in Florida? I think so. Heard they wanted to stop short-term rentals. Yeah, I'm sure lots of places would love to stop short-term rentals. Okay, so what are the best potential properties to invest in during a recession? I've written 2 free special reports on this topic. And you can get those. You can contact me at my BiggerPockets profile. Write this down. If you want to get a copy of either one of the free special reports, you can reach out to me, wellingscapital.com/ resources. And I'll be happy to share that free special report on my favorite 2 asset classes. Oh, okay, you want to know what they are? Yes. ML, I'm a big fan as well. Daniel Shaby says, rather invest in another property now. What's a good way to use my primary residence? I can't really answer that. Kind of specific. Nate, you might want to take that one on. It might have to draw out more questions about that to understand that a little bit better. But what are some asset classes to invest in during a recession? Let's look at mobile home parks. Wait, the 121 says I'm only 15? That's awesome, man. Hey, somebody should help the 121 here. He's only 15. He wants to flip a house. Nate, you might want to jump in on that. Okay, let's look at mobile home parks. If you're downsizing during a recession, you may go from a 4,000 to a 2,000 square foot home. If you're in a 2, you might go from a 2,000 square foot home to an apartment. If you're in an apartment downsizing, you might go to a mobile home park. Well, if you're going to go to a mobile home park and you're downsizing, where are you going to go? Well, maybe back to your parents' basement or maybe under a bridge. So there's really not very much to go down from in a mobile home park. And by the way, if you look at mobile home park statistics through the last recession, it's the only asset class that I'm aware of that had not one bit of drop during the last recession. It just kept going up right through the recession and beyond. So think about mobile home parks. Think hard about that. Brandon Turner, our one and only friend, Brandon, from BiggerPockets, is actually investing heavily in mobile home parks. And one of the reasons is because it's recession resistant. Nothing's recession proof, folks. But mobile home parks are a great place to invest. If you don't want to own one yourself, you should band together. Let's get some of us together here and invest in mobile home parks. If you're interested, just put the word out here on the forum or contact me at my BiggerPockets profile. Again, I'm Paul Moore. Now, by the way, a recession-resistant asset is one that does great during a recession and also does great in other times as well. And so I think that mobile home parks are a great one. The lot rent on a mobile home park is a fraction of what costs living in an apartment, half the size as some of the mobile homes are in certain places, even a third as much in places like Connecticut. So check that out. Mega Bubba 2112. By the way, my sister's license plate is YYZ 2112. Some of you will get that. So how about self-storage? Okay, I just wrote a special report on self-storage and how it performs during a recession. It's a 30-page report, and it does phenomenally well. Think about it. People downsize from a large house to a smaller one or a smaller house to an apartment. They don't want to get rid of their stuff, and for a fraction of the size of their rent, the price of their rent, they can actually store their stuff. They have antiques to store, they have business stuff, they have stuff they don't want to get rid of, and they can usually think, hey, I only need to store this for a short time, and for, let's say, $100 a month, they can get a self-storage facility where, rather than sell the stuff or give it away to Goodwill. So self-storage does extremely well. The tenants in mobile home parks and self-storage do incredibly well during recessions. We call them sticky tenants. Now, some people think sticky tenants are tenants that have Velcro suits, and I'm not one to judge. It probably includes them too. Right, Matt Faircloth? But hey, sticky tenants are tenants that generally don't leave just because you raise the rent a little bit or just because things aren't going perfectly well. So thank you, Jason. Thank you, Abraham, Muhammad, Tiles, Big Roy, The One. You guys, if you want to reach out to me, we can talk about mobile home park investing offline. I can tell you we're investing. My company, Wellings Capital, invests heavily in mobile home parks and self-storage, and we think it's going to be a great place to invest for a long time. Alderine Brady says, what do you think about Kansas City? I love it. I think it's a great place to invest. Cali Valley says, my 80-year-old grandmother rents out 4 mobile homes within a mobile home park, has cash flowed through her retirement. That's awesome. Oh, her through retirement in Indiana. That's great. Tim says, what tips, suggestions would you give to someone changing careers to become a commercial real estate agent in San Diego, given the potential looming downturn? Get with the very, very best, most experienced mentor you possibly can get and hang with them and become try to buy in, serve them well, work for them for free or whatever, and then try to buy into their book of business over the next couple, decade or so. But please jump in it for the long haul, not the short haul. That's awesome. Ryan, do you prefer investing in the suburbs or the city? Both. There's new statistics showing that people are moving out of downtown and into the suburbs again because downtown has become too overcrowded. Hey, Jason Humphreys from Canada. Yes. Hey, Jason, do you like Triumph? Triumph's a forgotten band. They were almost as good as Rush, and nobody remembers them. Edgar says, getting ready to lock in a HELOC on primary home, 100% LTV to either buy later or invest as a Go mobile home park syndication. What would you recommend? I highly recommend a primary HELOC in place of a fixed mortgage. By the way, do you know there's a website, I think it's called replaceyourmortgage.com, and another one's a YouTube channel called VIP Financial Education. I was looking at my notes. That will teach you how to put a HELOC on your home as a primary instead of a mortgage and pay it off with the same payments in 7 years instead of 30. Yes, I'm serious. I'm doing it myself. I highly recommend you consider it. Tricia says, I know Rush and Triumph both. Yeah, I spent the weekend, by the way. I'm not as good as Brandon Turner, but I actually spent the weekend playing guitar. I learned a new Zeppelin song last night. I'm just pretty proud of that. So give me a thumbs up if you like Led Zeppelin. Learned some Pink Floyd songs this weekend as well. Do you suggest buying property in college areas? Crystal, I'm up and down on that. I don't know. Which countries would get hit most by the recession? No, they will not be affected equally. And I don't know how to really predict that. I don't think even Warren Buffett would try to predict that. I'm sorry. Hey, Peter from Mexico, thank you for joining. Hey, Tricia, thanks for that kind reference. Paul, do you know anything about the Atlanta market? Abraham, I don't. I tried to buy apartments, and I invest in self-storage in Atlanta right now, but I don't know enough to speak to it authoritatively. We're going to have to wrap up, folks, in a minute. If you haven't joined BiggerPockets Pro, please sign up. Join me there. If you are not coming to the BiggerPockets conference, why? It's going to be in Nashville, Tennessee, October 6th through 8th, and I'm hoping to see all of you out there because it's going to be the greatest BiggerPockets conference ever. And some of you know, tongue-in-cheek, why I'm saying that, right? So Peter says, answer my question. Peter, I don't know your question. How do I start investing from afar? Peter, you can reach out to me. Depending on how much capital you have, I can give you some ideas. You may want to consider going into a crowdfunding vehicle. And there are some other places you could invest in the U.S. I highly recommend you consider investing in the U.S. for the stability. Hey, Richard, I hope to see you in Nashville. Cody says, will politics in 2020 affect real estate prices? Yes, they will likely soften real estate prices in 2020. Thanks, Tricia. That's nice of you. Life True says, what do you think of Jacksonville, Florida? They were hit pretty hard during the last recession. They lost 55% in value, but I think it's better than some places in South Florida. Okay, you guys, you're awesome. U of M bubble, I don't really know. Somebody else on here says there's a bubble in Ann Arbor, Tali. So that's all I can say. I was repeating somebody else. Recommended crowdfunding organizations. Reach out to me, folks, if you have any more questions and I missed them. You can reach out at wellingscapital.com/resources, or you can ask me a question on my BiggerPockets profile. Thanks, Ed. Is wholesaling a good approach prior to a recession? Yeah, it's a great approach as long as it's a great approach. It's a lot of work. It's very hard to compete with the big guys, but it's a good approach anytime. But you're trading labor for dollars, and you want to get to a place where you're not having to trade labor for dollars. Okay, that's my last question I can take on. You guys are awesome. I'm so glad you took an hour out of your life to join me today. I hope this was helpful. Do me a favor, if you got anything out of this, will you give us a thumbs up or a like or a share? Thanks, Mike. Thanks, Henry. Thanks, Nick. Nick, crowdfunding again, reach out to me. I'll try to give you some ideas. Peter, how do you... Oh, okay, great. So thanks. Has anyone found if Chinese are bringing investments into the U.S. as much before? It's slowed down some, Admir. So anyway, thank you so much. Appreciate you all. Have a great day. And we will catch up with you next time here at BiggerPockets Live.